Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. So let's try to create the trading plan for the beginning of the next week. In general, the situation on the euro currency currently is twofold, especially if you will read the analysis of the higher time frames, of the weekly time frame, monthly time frame. You'll see that all of these time frames now have patterns that are opposite to each other, and that's why it's very difficult to estimate the long-term direction currently on the market, because to speak definitely about whether market is ready to go to the upside or downside, market should take out significant highs and lows that currently stands rather far, or rather extended from the current price action. And in fact, the higher time frame patterns now allow market to fluctuate on the current levels on the lower time frames without breaking the setups and patterns that now are forming on the higher time frames. For instance, if market forming some significant bearish engulfing pattern on the monthly time frame, erasing of this pattern will be taken out of these highs, of the highs of this pattern. And as market stands somewhere in the middle of this pattern, whether it will pass 100 pips up or down, that will hardly impact the overall situation on monthly time frame. That's currently the situation as it stands on the weekly and monthly periods. Especially speaking about the monthly period, we have there the long-term bearish engulfing pattern, as well as currently we have the bullish engulfing pattern, and depending on what extreme of first pattern or the second will be erased, only after that we could estimate the possible long-term direction. Since this is a bit tricky situation, we have nothing to do but to be focused on lower time frames, particularly on the daily time frame and intraday charts. That's why in the nearest perspective, I think that in the perspective of the couple of months, our setups will be rather short term. We probably will make the trades based on some definite and precise setup patterns with the nearest targets in terms of the daily time frame, of course. But these moves probably will not be very small, so it will be rather attractive. And the first pattern that we will discuss here is situation on daily time frame in general, and particularly the stop grabber pattern that we finally have got from the Friday's price action. We have discussed this possibility already, so we will take about it with more precision. So first of all, on the first glance, it looks like the upward situation, upward context is stronger here, because what we see, in fact, nice thrust up, 50% retracement, continuation, market has hit 618 extension, small retracement. That is also the support. As you can see, that is the, by the way, the confidence support on the 4-hour time frame. Now is also the monthly pivot point. Market has touched it, turns right back, and has formed the bullish stop grabber pattern. So speaking about the upward perspectives, first of all, I would like to say about the target of the stop grabber. This pattern suggests the taking out of these highs at minimum, or that could be the starting point for the continuation, for instance, for that ABCD pattern. That is also could be achieved by the price action. But what is more interesting is that the depth of this retracement. I think my thought is that this is the ultimate level for the current retracement. If market will pass through it, that will probably put under the question the further upward action, because that is just a minor extension, 618 extension. Market should not show the significant bounce down from after the hitting just this level. Also, that is the monthly pivot point. That is rate support of the whole thrust up. It's confidence support on the intraday charts. And finally, that is the trend line that it could be drawn right here. Okay. If market will pass through all of them, it will erase all bullish support levels, patterns, whatever we get bullish on the current market on the daily time frame. And by the way, it will shift trend to the bearish side as well. That's why I think that for the short-term perspective, that is the ultimate level. But is it really some warnings about the perspective of the upward action? Well, I think we have some. First of all, take a look how these tops were created. That is the bearish engulfing. That is in fact evening star. So initial first top, shooting star, and move down. That is the 3 candle pattern that calls the evening star. And this could be just a retracement of this pattern. That is also possible. Also, since currently we have bullish trend, but if it will turn to the bearish side, we will get the bearish divergence here as well. Right at the 50% resistance, the major swing on the daily time frame. And that could be, in fact, the starting point of the downside move. But the intrigue of current situation stands with this point, because as you can see, that low and this low is very close to each other. In fact, the triggering point for evening star. So until market will move below this low, this pattern will be triggered, and simultaneously this low is the invalidation point of the stop grabber. So if market will pass through it, it will simultaneously trigger the bearish pattern and erase the bullish pattern. That's why this low is very significant, and that's why I think that this swing low, and in fact the swing of the stop grabber, will be our working swing for Monday. On the 4-hour time frame, I would like to show you this, just the same levels that I just discussed, so you could see it clearer. So that is daily confluence support, or you could say that is daily as well, I suppose. Not only 4-hour time frame, but the daily confluence support also. Monthly pivot point, trend line, okay? So it's really significant low. On the hourly time frame, that's the working swing of the stop grabber. So you can see that was, by the way, some small wash and rinse of these lows. Also, you can see that this is also an agreement. This market stands at 1618 extension of that swing, A, B, C top, 1618 extension, and that's our working swing of the stop grabber. I think that we should be focused on the area between 130.80 and 131 area as the level to watch for long entry based on the stop grabber pattern. The stops should be placed somewhere below this low of this pattern. Another attractiveness of this pattern, its probably advantage, is that you can see that the risk of this pattern is not very significant, so it will be somewhere around 50-60 pips. Well, but reward will be very attractive, risk-reward ratio for this pattern. And if we will be wrong, our loss will be probably not very significant. Another reason why we could deal with this stop grabber pattern, that in fact we do not have anything else what we could stick with, and the stop grabber pattern also have the quality of determining pattern in terms of further directional on the market. If stop grabber will fail, this will simultaneously open the road to the downside, I suppose, and we will have to change our trading plan, since the context will change. If it will work, well, that's nice. We will be possessed on the upward action. That's why I think that it's worth of our attention, especially because at the bottom of this pattern we have the significant low, and if you will take the 4-hour time frame, you'll understand that this support is rather significant and sufficient for the market, that if it has really intention to continue move high, that's strong support. It will hold any market that really has the bullish power and intends to continue move high. Well, that's why I think that the stop grabber is not bad pattern to focus on the beginning of the week, including the reasons that we have just discussed from the perspective of the clarification of further direction of the market on the daily time frame. So let's see how it will turn, and let's watch for 138 to 131 area on Monday.